Yeah.
Today, the exact reverse has happened because IndusInd is now getting digested by the street. The stocks recovered from the lows. The banks are not falling further. In fact, in a couple of the private sector banks, we are seeing some purchases. So as a result of which, the Nifty bank is doing well. The IT index, however, is now catching up to the weakness that we saw over the last 2 trading sessions overnight. And that is the one which is under pressure, but at the same time, it's recovered from the lows for that IT index as well, perhaps on account of the recovery that we've seen in Dow futures, as Nigel pointed out. The second data point that I'm looking at is that the low on the Nifty yesterday was 22,313. The low on the Nifty today, 22,329. So the low on the Nifty today has been higher than the low that we saw yesterday as well. So give or take, whatever weakness we've seen in the IT pack as well, we've managed to make a slightly higher low, which is good for the market. We've recovered from those levels as well. The only fly in the ointment is that every time we go to 22,550, 22,600 thereabouts, we see some supply. But so long as there is support at the low levels, no real worries perhaps.
Well, that's right. Mangalam, just a couple of stocks I want to highlight, and that's what's telling you the mood of the market is not too bad. Keynes in the morning, it was down close to around 8% because of that show cause notice that was served to the MD for financial year 2023. From a negative 8%, the stock is now up close to around 2%. So it's recovered a good 10% from the low point of the day, because the point was it wasn't a conviction of any kind of wrongdoing. It was a show cause notice that too dated back to a couple of fiscal years earlier. So that's recovered. I recall when things were going very, very weak for the markets at that point of time, well, the stock would have still been under pressure, but that dip has got bought into. The other point is, IndusInd Bank was lower.
Yes.
The problem is now the trust. Valuations could support everything. The problem is trust. The street is a little bit nervous. From the lows of the day, the stock has recovered, but a group stock, which is Ashok Leyland, out there, that stock is still down close to under percent after falling close to around 4% in yesterday's trading session, just because it belongs to the same group. And there's, as it is, a promoter pledge on their holding in this company as well. So the market doesn't like these kind of things. Valuations, numbers, they matter secondary. First is the trust. And what's happened in IndusInd Bank, that's what's hurt the trust of investors in IndusInd Bank. And in turn, the Hinduja group stocks as well. Could explain why Ashok Leyland is a little bit lower. But I think let's get a call on the markets. We have recovered from the day's low, as we had mentioned earlier. Mitesh is with us. Hi, Mitesh. Good afternoon. Not too bad, right? We had the flows numbers that came in. They aren't looking that bad. And, in fact, the markets are seeing a buy on dips. That seems to have resumed. Where are we going from here? Would you buy this 30, 40 point downtick that we're seeing even as of now?
That's right, Nigel. I think the market has kind of held up very well, and my worry was in the morning was whether we'll start trading below 22,300. We got a low of 22,329 and have bounced back from there. I think holding on to 22,300 means that we are in that range of 22,300 to about 22,600. But the way the charts are shaping up, there's a good chance that we'll eventually cross 22,600 and attempt that big level of 22,750, 800, which was acting as a support. Once we cross that, then I think we are looking at even some kind of an up move starting. But at least till then, the holding of 22,300 means that, that bounce back game is not yet over, and we are still attempting to claw higher and look at higher levels. So in that sense, staying positive. ICICI Bank is a recommendation on the long side. Buy here with a stop at about 1230, targets of 1275. And HDFC Life is another one. It gave a breakout yesterday. Today it's giving some kind of a pullback, but my sense is that the pullback might be over. So buy here with a stop at 624. Look for a target of 655.
Okay, all right, got that. Mitesh, just hang on for a second because, we wanted to discuss some of these IT stocks with you as well and levels. Let's pull up IT. For me, the only real worry in the market today is the selling in IT. Now, it's been triggered by a couple of brokerage notes. Motilal Oswal wrote a report, and then we had Morgan Stanley come in and downgrade Infosys. I must add that Morgan's target, even after the downgrade, is higher than where the stock is. The stock has already fallen more. Morgan, I think, is at about 1,700 on Infosys, and Infy is now sub 1,600. Motilal's larger point was that this whole sort of expectation of a rise and recovery in discretionary spending in the US, that seems to be coming under a bit of a cloud. And you never know, because how US businesses eventually feel given the tariff uncertainty and the economic uncertainty that's looming on the US itself right now. So that's what's making them a little cautious. We'll get Rima in to dive a little deeper into those notes to understand what the concerns are. But and it's not just today, might I add. Of course, let's look at all the IT big boys today. Infosys is down about 4.5%. Wipro, Tech Mahindra, HCL Tech, TCS, all the stocks are down. But even if you look at this calendar year, then IT has actually led the fall. Leave aside accidents like IndusInd, leave aside a Trent, which is the worst performer of the year after IndusInd, because that's a separate matter altogether. If there's a sector that's led the market down this year so far, it's actually IT. So, Mitesh, very quickly on technicals, on the large cap names, what would the advice be? Any red flags, any line in the sand, anything that you'd want to put out as a caveat for anyone tracking or trading IT stocks?
I think short-term pain definitely is there. For example, if I was to look at the chart of Infosys, it's broken below a very key level of on the monthly basis. On the long-term chart basis, it's broken below a very key level of 1650 odd zone, and I think that's happened today. Yesterday we saw a low of 1637, but the closing was 1661. I was hoping no further damage happens, but today we are trading down. So I think that's one name which is clearly high on the casualty list. Tech Mahindra, I think similarly had this breakdown a few weeks back when it broke the pivot of 1640, and then following that broke the 200 average at 1580. So I think my idea is that from a investment point of view, IT is to totally avoid. Yeah, you might get a bounce back once we see the stocks are extremely oversold and they're getting close to it. So they might give you a trading rally, but I would just look at a small 1 2 day to 2 3 day kind of a bounce back and then avoid these stocks.
Okay, all right, Mitesh, thanks very much. We'll come back to you after a bit. We have Rima with us now, so let's ask her exactly what the concerns are. Rima, so what is Morgan saying, and what is Moti's point of view?
Well, for starters, both Motilal Oswal and Morgan Stanley have downgraded Infosys. Morgan Stanley has downgraded Infosys to an equal weight. The target price stands at 1740, while Motilal Oswal, it's a neutral rating now. Target price is 1650. Motilal Oswal separately has also downgraded Wipro to a sell and an LTTS to a neutral. And both Morgan Stanley and Motilal Oswal prefer TCS over an Infosys. Motilal says LTI, Mindtree, TCS are their preferred picks because of the risk reward. While for HCL Tech, it's a more balanced portfolio. Morgan Stanley too echoes the same thing. TCS over Infi, TechM over HCL Tech, Coforge over Emphasis. Now the key reason, what makes both of them bearish or a little concerned. Well, if you remember, FY24 was a solid growth year, right? It was all about digital transformation. Growth rates for IT shot up. Then FY23 and FY24 growth started slowing down as companies started prioritizing cost optimization over discretionary demand, largely due to inflation. High inflation rates in the US had started pinching the tech budgets. So FY23, FY24 growth had slowed down. But the expectation was that FY26 and FY27, courtesy Fed rate cuts and generally 2 years of slowdown, things will pick up for IT companies. Growth rates would recover to high single digits, perhaps even hopefully double digit. That was the expectation, and now brokerages are reassessing that expectation of a growth recovery in FY26 and FY27. So, Motilal Oswal talks about how clients are back to being in a wait-and-watch mode. Decisions are not being taken. Discretionary demand recovery, which was expected, is unlikely to play out, and therefore growth forecasts have been slashed. You can see on your screen, for FY26, we're talking about mid-single-digit kind of a revenue growth. Even for FY27, it's not that growth is, coming back. It's still about 5 to 7% across large cap IT names. So that's the key concern, that expected recovery in FY26 and FY27 is unlikely to play out compared to what the street was hopeful about over the last couple of months since that IT recovery in stock started in June. Back to you.
That's a sobering play, Rima. I mean, in terms of the toned down expectations of earnings, especially FY26 is quite stark. FY27, maybe Street is still thinking it will even out, sort itself out, but FY26 expectations are really coming down. Let's take this up with Prakash Diwan, who's with us on the show now. Prakash, watching Rima's graphics, I was just thinking you could replace the IT names and put all the FMCG names there. You'll have the same growth numbers, 3, 4, 5%. And that really makes you think. Two large parts of the market, the large cap market, struggling with similar issues of a growth slowdown, and one can argue when valuation is a separate argument altogether. But yeah, that's the reality of our large cap market right now. On IT, what's your call?
So, Surabhi, good afternoon. Very pertinent comparative, but I can only tell you that FMCG is underowned as compared to IT, which was overowned, and that's precisely where the disappointment is getting to be very starkly reflected in the prices. Nobody would have expected a TCS or Infi to lose ground in such a rapid fashion. But remember, in this last, 45 odd days that we've 65 odd days, sorry, 55, 60 odd days that we've been seeing, the Trump administration do its bit. There's absolutely no indication of what was earlier anticipated, which was tax breaks, and that would have led to further growth and new TCV wins. Nothing of that sort is happening. The other thing that's happening is that China is taking the entire limelight away in terms of what IT is going to shape up like. It's more what China brings up that's going to probably decide in terms of the trend, in terms of allocations of fresh capital. I don't think Indian IT companies are anywhere close to bracing up for that kind of a leadership position. So it will be a while before we weather the storm. I think IT is still going to find its way down. FMCG, to be honest, could probably spring a surprise at some point in time once money starts coming back, but then that's for a separate discussion. But IT, I'm absolutely not positive. I cautioned about IT sometime back when we thought that there was a spark, this could do well. But I don't think it has the conviction to defy the overall slowdown and the fall in indices.
Right, Prakash, thanks a lot for that. The other one is the more interesting one that I'm looking at. The reason why I'm looking at that is because it's the telecom space. You have Jio Platforms and Bharti Airtel. Both of them announced tie-ups with Elon Musk's SpaceX, under which they will offer Starlink's satellite broadband services to its subscribers. But will Starlink become mainstream in India? Rima joins in to explain that. Rima, the street was hoping for some benefits coming in to the listed telecom players. Bharti Airtel opened well, but from there it's seen a 4% decline. And thereafter we also expected some fears on Vodafone and Indus Towers. Both those stocks are lower as well. So one is just trying to understand what exactly is happening. What should one make of the business case of Starlink itself?
Well, it's hard to know because we don't know the pricing, in what form and fashion Starlink is going to come. But here's what the consensus opinion now seems to be. Yes, there is an opportunity because India has a very large underserved population. Bernstein, in their note on 4th of March, talked about 40% of India is still not connected to the internet. So there is an opportunity to serve places which terrestrial networks cannot reach. That said, it depends on the affordability because Starlink's offerings are expensive. Just to go back to the conversation that we had with Balaji of IFL, the telecom analyst at IFL, and he said Starlink is priced at $80 per month in the US. Even in a subsidized developing economy like Kenya, it's priced at $10. Well, that is still expensive compared to what Indians pay. Indians are paying $3 in terms of an average revenue per user. That's what the ARPU is, between 200 to 250 rupees per month. That's $3. Even for broadband services, which is where Starlink will come in, it would still be $5, maybe at best $10. So Starlink is going to be expensive, and plus there is a hardware cost associated with it. That's reason number one. Secondly, it's not that even if whenever revenues start accruing, it's not going to be immediate because as of now at least, Starlink is yet to receive its license in India, and secondly, spectrum is yet to be allocated. So at least in the near term, nothing changes. Back to you.
Okay, all right. Thanks a lot for that, Rima. Well, Prakash, coming across to you, your view on these names. The stocks are a little bit under pressure. It seems it's going to take a lot of time. It could be more of a parallel play rather than being a threat. And also, I wanted your view on Indus Towers because that one has lost 4.5%. The fear is that that this will take over, which is unlikely to be the case. But that's the fear. Would you buy into this dip on Indus Towers, or do you think you like to stay away?
Good afternoon, Nigel. So, first and foremost, the reason why the market is celebrating a bit of a uptick on Reliance is that before this announcement came in the morning today, you really didn't have, it was thought that Reliance probably was losing out to the new invasion from the satellite channels, and it would probably lose some ground. But this kind of equals the entire thing where both the players have an equal opportunity. So instead of competing, they end up collaborating. So that's great news. As Rima said, it's not going to make a material difference very soon. At least for the next 18 months, you won't see any material improvement in ARPUs. And even when that happens, it's going to be incrementally very, very small. Remember, India is not a market which is price insensitive. And these areas that you're talking about would probably be, getting broadband connectivity on airplanes and in, offshore rigs and in areas like Ladakh, all of those. So it's not a big segment that it will kind of start catering to. on this whole thing of Indus Tower losing out or a Vodafone losing out, I think satellite communication is agnostic to the terrestrial setup that we have. We are a very vast country and we are still underserviced in that sense. I don't see any reason why an Indus Tower will lose out of this business. In fact, the number of towers required to do 5G connectivity, including BSNL's own initiative, is about 12 lakhs. And the number of towers that we have in play at this point is about 7.5 lakhs. So we're still way short of what's the optimal requirement. There's room for enough growth. I don't see any reason why this. In fact, if somebody were to look at money, allocating money to this sector instead of the OEM, it could probably be Indus, which is a great play. So things are looking up very positive for the sector, and of course, this dip that you get in index is probably even a better entry point.
So more complementary in nature rather than a substitute, right? Indus Stars, you believe there's a better amount of penetration. You'd rather be a buyer on this name. Is that correct?
That's right.
Okay, all right. Prakash, before we let you go, just very quickly, I wanted to ask you about the cement pack. You track the space closely. Dalmia and Ramco are under pressure because of that additional royalty that they'll have to spend on limestone that's mined in Tamil Nadu. Your view on it, actually, it gives them an excuse to go ahead and hike prices from here on as well. What do you make of it?
You said it, Nigel. I think the price hike is probably overdue, not just for these players, but if you look at some of the expansion that's happened in volumes in the eastern market, there's been absolutely no talk about price hikes. Consolidation has probably kept the industry busy. And one thing you need to understand, before the monsoon kicks in, there's going to be a very hectic level of activity on the construction side. And the next 2-3 months is probably going to see a lot of demand pick up, the volumes pick up because of the demand pick up. And once that happens, there won't be any inventory that dealerships would be probably left with where price hikes would not be constructive. So I think the timing would probably be right. You could hear about that sometime in April. I don't know what quantum it happens, how staggered it is, but these players will be able to absorb this cost because it's incrementally not very significant. Overall, I think from a pricing perspective, the sector hasn't had any improvement for a long time. And on an EV/EBITDA level, if you see, things have just been kind of moderating. So the valuations are very, very soft. There's nothing to lose out there, and that's exactly why you don't see too much of selling out here in even the larger names.
All right, we take that point. Just to complete the whole loop, we started with IT versus FMCG. Right now, as we speak, ITC's moved to the high point of trade. Are you a buyer in any of the FMCG names, hoping that maybe at some point there would be some recovery?
There will be, and you track this sector so well, Mangalam. You know that the consumption side will always grow with a lag. If you look at all the data that's coming through, whether it's CPI, whether it's even IIP for that matter, I mean, not that it's directly correlated, but you will see that the basic consumption trend is positive. And once rural consumption picks up, you'll have a host of improvement in numbers that will see volumes from Dabur, Britannia, and a lot of those names. But it's just that IT will only draw attention once there's some sort of a money getting allocated to it, and that could probably still be some time away because most of them are large caps, and that would mean that you would have to see some sort of return from the FI side as well to make them perk up. But from a risk reward perspective, IT probably is very well placed, and don't miss out on the HULs of the world as well. When the elephants start dancing, you know what happens. So it's been a while that this happened, and probably it's time for that rotational thing to start favoring FMCG as the monsoon comes closer.
I have a feeling that the elephant may start dancing very soon.
It hasn't danced in a while. It's been sleeping.
So typically, what we've noticed is that the elephant has a longer slumber period.
That's true.
And the minute it starts dancing, the way it dances, the impact that it creates is incredible. So we'll watch out for that. Prakash, we'll take a short break, come back. On the other side, we'll have the Blackstone Group, which is bullish on India. We'll bring you Money Control's exclusive conversation with Stephen A. Schwarzman, who's the chairman and CEO of the Blackstone Group. Welcome back. You're watching us here on Closing Bell. The market's recovering a little bit. The Nifty is now down just about 26 points. And the reason for that is the outperformance that we're seeing from the Nifty Bank, which has now hit a double century, up around 205 points. So that index led higher by a couple of these heavyweights. We have ICICI Bank, which is doing well. HDFC Bank as well was doing well, though saw some bit of supply at higher levels, currently still holding with gains of about 1.5% itself. Let's welcome Rashi Talwar Bhatia, who joins in on the show. She's the partner and portfolio manager at Ashmore. Rashi, always a pleasure speaking with you. Just wanted your thoughts on what you make of the market after this correction. What are the kind of opportunities that you find attractive at these levels?
So, Mangalam, actually, I think the markets, we've seen quite a serious sell-off on the large caps. But when it comes to the small and mid caps, we're still trading at one standard deviation above long-term average. Large caps are now trading at about 16 times 1 year forward in a good range where you're starting to see some price corrections in stocks where they're starting to look interesting. And I think, we've seen nearly $26 billion of selling from FIIs over the last 6 months. I think most of it is done, so a lot of it is behind us. And when they start to come back, you will see them starting to come back first in the large caps. And that's where they will, that's where the flows will come initially. So honestly, on the small and the mid, I still continue to be not so constructive. You've seen sharp drawdowns on a bunch of names, and one-off stocks may start to look interesting. Where the earnings growth story continues to remain strong, but you've just seen a really sharp sell-off because of flows, etc., or somebody facing redemptions or something like that. But that would be an exception and not the rule per se. In terms of where I am more constructive at this point of time is the larger cap stock names.
Okay, all right. Hi, Rashi. Good to see you. When I recall the last time you chatted as well, you were tilting more towards large cap names in compared to the mid and the small caps. And you said the next couple of months are going to be fairly cautious. 2 months have passed. What do you think? On the headline index, are we closer to the bottom? Do you think much of the pain is already in the price with a 15% correction on the Nifty? And also in terms of stock sectors, there are opportunities out there. Many stocks have fallen 20, 30, 40% as well. I think on some of those marketplaces, if I remember correctly, I think the commodity exchange was something that you all were betting on. You could correct me on that. Any fresh buying that you'll have done, a sector, a particular theme you like, a stock?
So, I think you're absolutely right. I think on the large caps, we've seen the selling, as I mentioned before, and things are starting to look a little interesting over there. I would have hoped for more policy stability when it came to the US, and that would give us a little more guidance on how things will play out on the tech and healthcare sector. And I think that will happen, but I think the correction in the large cap names in the tech space looks to be, they're now trading in the range of 20 to 22 times 1 year forward earnings. They have bottomed in the worst of times with the US recession at 15, 16 times, right? So we're not very far in terms of what we're looking at. And I'm talking about US recession, which, 2 quarters of negative GDP growth is something I'm not so sure about at this point in time. But if you look at the mid-cap IT names, they're still trading at pretty lofty valuations. And therefore, the ask rate for growth for them is much higher than what today the large caps are looking at and where earnings have been moderated. And that leads me to the second part of what I want to say is that we've seen earnings for the large caps moderate in the 12 to 13% 1 year forward growth, 12 to 13% growth for 1 year forward earnings. But when you look at the small and the mid cap names, that has not happened. People haven't cut estimates. People are still hoping for some improvement in liquidity in markets and, don't believe that's going to happen. I think fourth quarter earnings and first quarter earnings, you're going to see those earnings cuts come through. And as those earnings cuts come through, you will see these stocks correct. You rightly said there are some stocks which do look interesting, where where the growth story is very strong, but they've seen a sharp sell down because, just the sector has or peers have, etc. And those are the opportunity dislocations that we're constantly looking for, but it's very stock specific. It's not something that is broad-based at this point of time. It's, like I said, a few which are more the exception and not so much the rule.
Okay, all right, Rashi, request you to stay with us. It's at around 3 p.m. or where we get Nimesh, who joins us to tell us what he's picking up in D Street action. Nimesh, hi, good afternoon. The market's not too bad, down 20-25 points after being down 150 points. Pretty okay, I think. What are the flows looking like?
Absolutely, Nigel. If you exclude the IT fall, then probably the Nifty is in the green. So that's a kind of a day, a big drag from the IT stocks, but overall a bit of recovery as well. And I think, Nigel, the big takeaway for me was the fact that, from a flow perspective, the feedback is that the selling intensity has definitely come down from the larger FIs as far as India is concerned in the last couple of days. And also the overall inquiry levels have also gone up as far as India is concerned. It doesn't look like there is commitment to buy. But at least there is an interest to look at India again after the fall that we've seen, and definitely the selling intensity has come down. So that's positive at the margin from a flow perspective. As I said, tech has been the biggest drag today, but barring that, you've seen a decent recovery in the other stocks as well. I think there is a bit of rotation happening as well. So technology is down. Well, there is a bit of rotation back into the financial stocks, barring IndusInd Bank, where there was a massive selling yesterday, and I guess even today, while the stock is recovered, some of the domestic mutual funds are still sellers, is what I understand. But there is buying back in the financial names and largely the large private banks, private bank stocks. So clearly a rotation from IT to banks is what I can see. But the big feedback is that at least the selling intensity has definitely come down from larger FIs.
That will make a lot of people very happy. The selling intensity does come down. Nimesh, individual stocks, what do you have on your list?
Well, so the first stock on my list today is Crompton Consumer. Again, a bit of recovery in today's trade, but again, the stock is sharply corrected from the recent highs. But here at these levels, the selling is largely done, is what I understand from larger FIs, and there is a small buying as well, and that's the reason why I've seen a bit of an uptick in Crompton Consumer today. The second stock is Century Ply, marginally under pressure today, but I assume that the buying interest has resumed. There are some buy flows as well, is what I understand from larger institutions in a stock like Century Ply, so that stood out for me. The third is a couple of stocks where there is delivery-based selling even after stock hitting 52-week lows. Samudra Motherson is one stock, massive selling again in today's trade. And Lupin, for a change, there is a delivery-based selling, is what I understand from larger FIs today.
Take that point, Nimesh. Thank you so much for that. With that, let's go to a network exclusive, which is Money Control's Bodhisattva Ganguly caught up with Stephen Schwarzman, who's the chairman and CEO of the Blackstone Group. Let's hear him out.
When we decided to come here, we announced that we would put $1 billion in India.
Right.
And people here probably forget that 20 years ago, that was a huge number. And we were on the front pages of all the newspapers. And now, as you say, we're many times what we expected to be, because the country is such a great place to operate. India happens to be our #1 performing market in the world for Blackstone. Our returns here on a gross basis are somewhere around 40% a year, way in excess of any other market. And we've spent our time building businesses in India to make India better. And we foresee being able to double where we are, to have a total exposure of $100 billion at some point in the future. We're rapidly growing here in India. We're the largest foreign company in the country. We're the largest owner of real estate in the country. We're the largest private equity firm here. We're in all kinds of interesting areas. And we found that operating in India is great, and we're very bullish on the future of the country. I know the stock market's gone down a bit lately, gets people nervous. In 20 years we've been here, this isn't the first time we've seen that. So we look at the fundamentals in the country. You have excellent stability of political leadership. Regulations have gone down from where we started. We see a very vigorous population, a lot of young people, sort of a preference for technology, technology industries. So we are very positive on the country, and it's great to be back.
Thank you. So you're talking about 100 billion of assets under management in India over, that is, if you were to double that number.
No, you gave us the right number,
right.
And we think we can grow.
So you're the country's largest landlord. You also have a large presence in the healthcare industry in the recent past. What are the other sectors that you could get into? Would you get into areas like data centers, for instance, or some of the what is referred to here as startups, consumer-enabled internet companies, those kind of areas?
Oh, actually, our biggest exposure here, we'll continue to do more, is in technology.
Right.
And in all kinds of expressions of what technology means. So, for example, Blackstone is the #1 developer of data centers in the world. And we're also the #1 owner of data centers. And this is just the start of the data center industry for India. And we can see very substantial growth there as artificial intelligence becomes much more widespread. The growth numbers are stunning in the rest of the world. And off of that base, along with the energy that's needed to power data centers, we would call it energy transition investing is a big focus here. As you mentioned, healthcare is also important given the size of the population in India. We have the second largest hospital group in the country.
That's right.
Among other things, and we can see more growth in that area as well.
You worked closely with President Trump, especially in his first term. India is about to negotiate a trade deal with the US. One doesn't know exactly how much time it will take. What would you advise India's political leadership to do when they approach negotiations with President Trump's administration?
Well, let's just start out. I'm not a government official.
No, of course.
I'm just...
We're very clear about that.
Somebody who knows almost all the people involved with these types of things. First of all, Prime Minister Modi and the President had a very good meeting, which is a great start. And they agreed to have a trade agreement between the two countries.
Right.
And they also made some other mutual understandings, evidently, at that meeting. And so I think that the baseline for India seems to me to be very good. There's a good relationship with the two principals. There's a lot in common. There's a favorable attitude, each country to the other one. And I think you just sort of start with a discussion. Evidently, there's already been a number of adjustments that the two countries have made. So I know there's always a high level of anxiety when anybody brings this subject up. But I think the quality of your leadership in India and the ability to reach agreements should be very good.
Insightful commentary coming in from the top boss at Blackstone. Meanwhile, just keep an eye on a couple of these stocks. Geo Financial Services, that's the one that should come up for you, up at the high point of trade, surging and how. This is the next Nifty entrant, so just keep an eye out on that stock. It's moved to the high point of trade. Tube Investments started moving in the last hour yesterday as well, and currently that repeats. The stocks recovered about 2.5% from the lows. That's moved to the high point as well. And we are seeing some traction in a couple of these FMCG names. We spoke about ITC earlier. Look at Godrej Consumer. That too has moved to the high point. Take a short break, come back, get you more on the markets and a lot of individual stock related action. We also get you the tomorrow trade.
You asked for green, you got green. The Nifty has moved into the green as we speak. The Sensex as well has seen a good recovery from the low point of the day. And the Nifty Bank, 250 points higher. Good move is what we're seeing out there. A couple of names that have moved up. I think JSW Steel was down more than 1.5%. That's down only around 0.5%. So that's recovered from the day's low. ICICI Bank, that's the big point that has a good amount of weight as well. That as well was trading in the red. That's moved into the green. Apollo Hospital that has visibility with regard to the inorganic growth and the EPS moving up from year on. So that stock as well has moved up. And Trent is the other one that's done well. Short point, Nifty moves into the green. Mitesh Thakkar is with us. Mitesh, good on the headline index. If you bought the dip, you'll be happy. What about individual stocks? What do you have for us?
Well, certainly, I think again, as I was saying earlier, I think the lower level got confirmed. So that still is good. What we need actually is the break on the upside. I think if that happens, that will be much better. But let's see. For the timing, I have a BTST and Aurobindo Pharma with a stop at 1099. And I'll look for a target of roughly around 1120, 1125, 1130 kind of level for tomorrow. And the other stock which I like is Indian Hotels, which I would want to see the stock get past levels of 755, it's at 751, 52. So around buy about 755, keep a stop at about, and more of a trading call, keep a stop at about 739 and look for a target of 79.
Got that. Thanks for that, Mitesh. By the way, keep an eye out on Coforge. The stock was down 4.5%. It's down 2.5% now. It's cut its losses big time. And Adani Green as well. Take a look at that beauty. From the lows of the day, it's seen a big recovery. Now up close to around 3% or thereabouts. But the big cue today was the mutual fund data for the month of February. And the equity flows did see some bit of a pullback, but otherwise the SIP flows were more or less steady. Surbhi is Arena's expert. Surbhi, tell us, how do you read those numbers?
Okay, so let's look at the big headline. And the headline is that indeed there is a dip in equity inflows. And it's the first time we're seeing this sort of a dip come through in the last several months. In fact, it's the lowest level of flow since April of 2024. How much is the dip? 26% month on month, if you're looking at it. The numbers now have come down to about 29,241 crores. So where is the pain or the slight pressure coming in? Large cap inflows are actually fairly okay. There's a minor dip, even month on month in large caps. But the bigger issue is with the mid and small cap side of the market. It finally seems that with the market correction ongoing, some sort of sentiment souring has actually happened. So now you can see that dip. In the small cap and the mid cap tally, that dip is a lot more apparent. The flows there have dipped about 33 to 34%, depending on which one you're looking at. The silver lining, however, is that the SIP number is still very, very strong. It's intact. 26,000 crores of flows coming in a month, by the way, which you must remember has a lesser number of days, 28 days in February versus the others. And this kind of a market environment, look at those pillars, rock steady and solid on SIP. So that's the good news. Why are the overall flows down then? Well, a couple of reasons. First, of course, is market sentiment. The market has been really testing the nerves and patience of retail investors. So that's something that you can't escape. Number two, the whole era of big bang NFOs, that's behind us. Even this month, the total cumulative inflows coming in through the NFO route, they've been dwindling down. Now it's sub 4,000 crores. Which is actually a 13% decline even month on month. So NFOs are not pulling in the money. Then I mentioned lesser number of days. More importantly, in mid and small caps, there is a dearth of now lump sum flows. A lot of advisors are telling investors to stagger out their investments, which is why SIPs are not falling, but that big lump sum gush of money, that's missing in the market. And for mid and small caps particularly, some SIPs where the terms are ending, the maturity is happening, those SIPs are not getting renewed. This is the feedback that I've picked up from the industry. Plus, there is redemption in mid and small caps. No denying that or taking away from that either. Again, one more interesting aspect of trade beyond the equity space is actually gold. Remember, gold funds actually blew through the roof because gold has been doing so well. In January, the inflow was as high as 3,700 crores. It's come down a little bit in February, but nonetheless, the number is not bad at all. I mean, gold funds have pulled in about 1,980 crores. So gold is still shining. People are chasing those returns. Equities are steady, but mid and small caps, that's where some profit taking seems to be happening.
Okay, all right. Good one. Thanks a lot for that, Surbhi. Well, let's focus on a couple of other names in the broader markets that are doing quite well. Akums Drugs, well, that one's moved higher. Citi has initiated coverage on the stock with a buy rating. Vinny has got details of that report. She joins us to fill us in with all of that. Vinny, stocks up close to around 2% or thereabouts. Tell us more.
Absolutely. We're seeing a good move coming in the stock, and the note was released somewhere around this afternoon. Now, what Citi has done, initiated coverage, like you mentioned, buy rating, target price of 700 rupees per share. Currently, the stock is around at 520 rupees. So, considerable upside is what we're expecting here. The company has, got a good edge over its competition in the near term, is what Citi is highlighting in terms of scale, manufacturing capabilities, as well as has a potential to scale up internationally in terms of the international business. Other than that, what Citi highlights that the recent weakness that we saw coming in for outcomes drugs in the recent times was mainly because of the API prices as well as the product development revenues in FY24 didn't come back and didn't recur in FY25. That is what we saw so far. But in FY26 and FY27, we are expecting that to come back, and that is a key highlight that will be driving the CDMO side of the revenues for the company. Now, they expect CDMO overall to see a good pickup in terms of growth in the first half of FY26. Around a 9 to 12% growth is what they're expecting for domestic CDMO business in FY26 and FY27. Also, in terms of the recent agreements or tie-ups they do have, the Euro 200 million CDMO contract in the international market is something that is a very good deal for the company. They've already received 100 million from this 200 million, and there is more growth potential going forward over here. Currently, when you're looking at it in terms of valuation also, it's trading at around 12 times FY26 EBITDA, which is around a 30% discount to the second largest player in terms of the pure play CDMO game. And that is why we're seeing Akums Drug is buzzing in trade today. Good growth is what Citi is highlighting about the company.
All right, we take that point up around 1.5% for that stock. Vinny, thank you. Just keep an eye out on Balrampur Chini. Something's up with that one. It's a big mover. Up around 9% right now as we speak, at a time when the mid-cap index is actually down by 264 points. And what's interesting is that typically when the sugar stocks rise, they rise in tandem and they rise in a pack. But this one's the only one which is rising today. If you pull up all the other sugar stocks, right, you pull up something like a Dhampur Sugar or Sri Renuka Sugar, all of them are lower. Dhampur just about 1% higher. We have Sri Renuka, which is actually at the low point of trade. So in light of that, it's just Balrampur Chini that stands out in terms of gains. And what quantum of gains? Up 9% right now as we speak. This month, in fact, this year so far, it's rallied about 35% in the last 12 months. This year, it's been a bit of an underperformer, down about 7% the last 12 months, a 31% move, 9% happening just right now. What we'll do is, we'll listen into some important market opinion. We had the top team of Citi India join us earlier today to discuss the impact of Trump's tariff war on India, the domestic macro picture, and the expectations coming in from the equity market in 2025. Let's listen in to what they had to say.
We just don't know how the tariffs are going to be imposed on different countries, whether this is going to be sector specific or it is going to go down to the product specific levels. So what we have done is we have done a very simplistic analysis of equalizing the weighted average tariff rates of both the countries. US will probably have to then increase tariff by about 8 percentage points. And given some elasticity estimates that we have, we think that's worth about $7-8 billion of impact on India's export, everything else constant. That's about 0.2% of GDP. However, we are very much conscious that this will not be as simple as it looks like. This game could be played from India's perspective by cutting down import duties also on some of the items.
Did slow down, but we believe it's a cyclical slowdown and we should see improvement going forward. We have already seen certain actions by the RBI, government, etc., which gives us more confidence on the growth outlook improvement going forward. Of course, these things do take some time to reflect. So it will take time, but the outlook seems to be improving. On valuations, we have seen the market pulling back, like it had gone to highs of Nifty 22, 23 times earnings at the peak. Now it's kind of come down to 18.5, 19 times. So that looks a lot better as well from a valuation standpoint. And then finally, from a flow perspective, we have seen a fair amount of outflows since October. But the outflows on FII side seem to be slowing down, and so far the domestic flows have been pretty resilient.
They have, yes, minor dip in this month, but otherwise picture has been pretty solid. Well, we also caught up with Kunal Shah, Director of Banks and Financials at Citi. And of course, we put that question to him. IndusInd Bank investor confidence has been shaken big time. So how is Citi as a house looking at these developments? Take a look.
People are looking forward to how the earnings are going to pan out over next 1 or 2 quarters. And the other aspect is in terms of the succession plan. So now post Mr. Katpalya, who takes up, who's coming over, I think that's going to be the key monitorable as we move forward over next couple of quarters. Valuations, again, when we look at it, it's closer to like 0.6 times multiple. And that's where, so maybe near term, definitely we could see some kind of an uncertainty being there in the stock. But valuations, when you look at it, that has also come off and it's factoring in those kind of a risk currently, yeah.
Right, with that, we'll take a short break, come back, getting more of the markets on the other side.
Welcome back. Well, Mangalam was just talking about Balrampur going to the high point of the day. We have Mayuresh Joshi as well. Mayuresh, what's your view on some of these sugar-related names? Balrampur, Chini?
Afternoon, Nigel. No, again, I think all these companies were in a spot of bother in terms of restrictions, in terms of pricing-related issues as far as their distillery operations were concerned. But as pricing has now become normalized, the expectations in terms of the throughput that is probably expected, specifically from the distillery operations, should be holding them in good stead. Again, I think in terms of raw sugar prices itself, the kind of estimates that one is receiving, specifically in terms of raw sugar output when it comes to Brazil or even Indonesia to a large extent, it probably seems that sugar output might be on the lower side as far as the global demand supply is concerned. And considering the inventory carryover in the Indian context as well for the next sugar season, it seems to be on the lower level as we speak. So I think things are turning out for the better. Balrampur being one of the largest distillery capacities that you probably have within the sugar makers might probably benefit as all these things probably come into the fore over the next few quarters.
What about the capital market players, Mayuresh? You know, we did see a big decline in a lot of these stocks, believing that maybe there could be some volume downtick that would come by, etc. BSE, for instance, has corrected about 35% from the top as well. Right now, it's pulling back up around 6% right now. Do you think, you know, some of these capital market plays will come back into fashion, especially after the data that we got from the mutual fund industry today? It's not as bad as it seems.
Afternoon, Mangala. Oh, absolutely. And I think the big picture argument stays with all these players, because over the next 5 to 10 years, if one really expects the kind of flows, both in terms of SIPs, the addition in terms of demat accounts, and the expectations in terms of transaction processing, I think the entire ecosystem, right from exchanges to wealth managers, to asset management companies, to brokers, might continue doing well. In terms of the key macro stat, 5.5% of the asset ownership is in equities as part of household savings, which is absolutely low compared to the global average, and in fact, even in terms of the emerging market average itself. So there is significant amount of growth that can probably come through. But at this juncture, and as we see the placement in terms of our rating and rankings parameters, I think a few of the wealth managers probably look a tad bit better placed among them. Case in point being either HDFC Asset Management Company as a case in point, or Anandarathi Wealth Managers. The thesis here is that in expectations of managing wealth per se, and specifically for the private wealth managers, the number of households, specifically in the elite category, might actually double from 8 lakh households to 16 lakh households over the next few years. And that probably gives a larger impetus in terms of all these wealth managers probably coming into focus and foray. So I think a few of the asset management companies to the likes of HDFC, AMC, a few of asset managers per se, like Anand Rathi, over a medium to longer term might actually do that.
Okay, all right. We just have a couple of minutes to go, Mayuresh, before the day winds up. So just allow us these few minutes. We will recap what the day has been like. So the market has managed to recover from the lowest levels of the session, but we've still not seen green on the screen, which is interesting because actually European markets have managed that green. And even Wall Street futures right now are trending higher. But here the enthusiasm was curbed to an extent, and the mid-cap part of the market has seen a slightly deeper cut than the Nifty. Mid-cap index is down about 0.5%, little over 0.5% as we speak. Let's look at the large-cap picture then. What didn't work for the market? IT obviously is a theme, as we've been telling you. A couple of downgrades, couple of brokerage notes, Morgan Stanley, Motilal Oswal, questioning some of the companies like Infosys because of their additional exposure to the US. That led to a broad sell-off. Infosys is the weakest stock on the Nifty, 4.5% lower. Wipro, Tech Mahindra, HCL Tech, TCS, big drawdown because of the IT part of the market. What else was weak? Nestle lost about 2.5%. Asian Paints was down about 1.5%. And names like Tata Consumer and Lever also didn't quite fare too well. So that's two large parts of the market, both under pressure, IT as well as FMCG. Let's look at banking now. Relatively better off. Bank Nifty is actually the only major index which is in positive territory, about 0.5% higher. Let's start with IndusInd Bank. After yesterday's, absolute slam dunk, about a 5% recovery on the stock coming in. HDFC Bank was the other one that did really well today, 1.5% up. ICICI Bank was flat, absolutely at the flat line. SBI was down. So very mixed trends for some of the large cap banks. Axis was also lower. The firefighting and the heavy lifting was largely because of HDFC Bank. Let's talk about the other gainers in Tata Motors, 3.5% higher. Bajaj Finance did fairly well. ITC bucked the weak trend in FMCG otherwise, up about 1.5%. And some gains coming through for Trent as well, 0.5% higher. Reliance was the other big boy. So these two, HDFC Bank along with Reliance, they were the batsmen that were firing on the front foot, but it wasn't enough. Still down about 25 points on the Nifty.
Well, since Reliance has found its form yet again, Jio Financial Services, which gets most of its value coming in from Reliance, well, that one as well popped up in trade. Remember, it's going to be part of the Nifty in the next few trading sessions. So that stock saw a good surge, was up close to around 4%. You have to talk about IndusInd Bank. Well, Indus Stars. The fear was that, in fact, Starlink comes into India, then maybe there could be a threat to the TARs. But most analysts believe that it was an over-exaggerated negative tick today, and it'll actually be complementary for their business. So let's see how that goes. For the time being, the stock was under pressure. SEPC, a stock we don't talk about very often. They won an order today. The stock was up close to around 20%. One of the top volume gainers. That's why we're pointing it out. NLC was the other one that was up close to around 4.5%. So big move was what we saw out there. And otherwise, NHPC, NTPC Green, both of them were up marginally in today's trading session. Mangalam, let's wind it down with a few more.
A few more mid-cap IT names. You had First Source, which is down about 7.5%. L&T Tech Services down about 5%. PB Fintech, the street did not like the divergence or the diversification move that they've made by investing in a healthcare company. That was down about 5%. Delivery continued to weaken. And from the cash market names, we had Spencer's Retail, which is down 7-8%. Bharti Hexacom, a stock that did well yesterday, is now down 7% in today's trading session as well. So we had a couple of gainers. We had Carousel, which was up around 20% after a tie-up with a US-based company. With that, we'll wrap up on this edition of Closing Bell. You stay tuned though. Markets Forward comes up next.